What's up, everyone? It's Hey John, and I want to discuss the cryptocurrency markets as a whole and why you should be so bullish. I understand the market right now is looking quite terrible. Bitcoin's going down. You're seeing the headlines. Everything is burning and crashing down. But I'm telling you, folks, this is a time to be buying some crypto. This is a time to be getting it on a low. Now, I do understand that you're very fearful. And you know what? You should be, because it's the Wild West. But at the same time, we do know that Bitcoin and cryptocurrency, well, it recovers over time. Now, will it happen tomorrow, today? Who the heck knows when? But if you think that cryptocurrency, Bitcoin, and everything else is going to drop another 50 or 60 or 70 or whatever odd percentage, ladies and gentlemen, I think that you should reevaluate what's going on. But let me give you some reasons as to why I think this is the potential bottom and consolidation period. So even if you don't buy today, there will be time to buy. But my point being is that you don't want to wait to the last second, because when you wait to the last second, when everything's all amazing again, well, you are going to be buying when it's going up, and by then, you will most likely be making less money. The 12-month percentage change of the CPI, we can see it's currently at 9.1. It was previously at 8.6. So what this means is that inflation is increasing. It is continuing to go up. So we've seen the Fed and Janet Yellen come out and say, hey, you know what, guys? I think we're in a good place. I think inflation is done. The takeaway here that makes me more bullish is that when I saw this data, and what happened afterwards. But what makes me so bullish about this data is that when it came out, I didn't see what I expected to see. Instead, I saw a little sell-off and a continuation of a bottoming process. But what I did not see and what I expected to see was a huge sell-off and a new low being created. But instead, we didn't see that, folks. This is what you saw. For example, we can see here, folks, the Bitcoin shorts and longs. So we can see in the earlier parts of the day, we were seeing the longs getting their positions, well, closed out. And then near the end of the day, up to right now, as of this recording, you're seeing the shorts getting squeezed. So what's going on, folks? What you're seeing here is actual data showing the longs and the shorts on the contracts on the CEX, people trading on margin, and their positions getting liquidated. So you can see in the beginning here, we saw the green bars. That means that, well, the longs, the bulls, they got sunken down, they got taken to the cleaners. And then progressing later onto the day, currently as of this recording, we're seeing the Bitcoin shorts. Now they're getting squeezed. And the reason for this is because we're seeing buyers come into the markets. And do you know why? It's because it's not as bad as everyone is saying. You can see right here, folks, earlier part of the day, a big sell-off, and then you're starting to see the Bitcoin bears getting liquidated, and now you're seeing the price move back up to literally where the price had initially started. Well, folks, if that isn't bullish, I don't know what is. See, the thing here is that what is supposed to happen is that when you see a new high CPI, a new higher high for inflation, that means that you're supposed to see, in theory, a lower low to break the previous low in the charts. And we are not seeing that. What you're seeing is something else. So I want to revisit the charts again, and we can see on a 3-month trend, we can see around 19,000 is the bottoming process. Every time it gets around there, it kind of consolidates and it bounces again. So earlier today, when we hit about, guess what, 19K, boom, everyone bought right away. And this continues the narrative bullish movement. And the reason why I call this a bullish movement is because we're seeing the bulls coming in to buy, but yet on the headlines, you're seeing this. Bitcoin prices are plunging. Red hot inflation data have knocked cryptos lower. Okay, while that may be true, it isn't telling the whole story, because what's happening is like you're seeing a bottoming process, and we've seen a triple bottom at around 19K on Bitcoin. Now, if it broke down below 19K and went to say 18, 17, 16, 15, etc., I would say, okay, there's new CPI data. It's actually demonstrating that the people are very fearful. But what you're seeing instead is that you're seeing these headlines and they're trying to shake out the retail paper hands. So on the back end, you can see people like Mark Cuban, Mr. Wonderful, and all these fat cats. They want to buy your Bitcoin and your crypto for cheap. So the mainstream media, while they are reporting what's going on, they aren't really giving you the true image of what's really going on. They're just highlighting a specific minute point on a data point instead of giving you everything. And let me ask you guys, what makes a better headline? Bitcoin crashing and plunging, or Bitcoin continues to consolidate? Well, ladies and gentlemen, I know what I would click more. The one that says plunging and it's going to zero. Consolidation means boring. Boring means no clicks. No clicks mean, well, no views. And no views mean who's going to watch your news channel. So you have to understand that these news articles and all this kind of good stuff, it's supposed to, in a sense, sensationalize everything they're doing so they can capture your interest. The Wall Street Journal, glut of goods at Target, Walmart is a boon for liquidators. Today is July 13, 2022. And we do know something called Amazon Prime Day. So everyone in the news is saying, hey guys, we have a shortage of this, a shortage of that, blah, blah, blah. But the truth is, there isn't really a shortage per se. So what you're really seeing is a supply chain delay. And when I say delay, what I mean is that, okay, if I order it now, I get it like a month later. So what's really happening is that, yes, the inventory you wanted today to sell today, well, it came a month later. And now these big retailers, they're having an issue of, okay, well, I ordered it and now it came all of a sudden, but I don't need it anymore. So now there's a glut of inventory. And this means that it's time to start to dump your inventory. And when this happens, they're going to sell it for cheaper than what it really is. And when consumers can buy things for cheaper than what it really is, then ladies and gentlemen, you're going to see consumers spend more money. And when they spend more money, well, it's going to be great for the economy because we are a consumer-driven economy. Now, I'm not referring to, say, like gasoline, food, and all those kind of things. So what I'm really referring to is like clothes, furniture, goods that do not expire. And what you're seeing right now is that you're seeing a glut of it. And I know that sounds ridiculous, but you're seeing lots of markdowns in the stores, online, and these retailers are using Prime Day to compete with them, like Target and Walmart, because they need to unload their inventory. And there's a reason why their stocks are coming down, because they have announced that, hey guys, we have like 34% glut of inventory. We over-ordered because during the supply chain disruption last year during COVID and all that kind of fun stuff, well, our inventory didn't come on time. And now when it did come, we're like, oh no, we got to get rid of it. So that is what you're really seeing going on. Now, this is a great way for you to go buy some stuff you actually want, because guess what, folks? It's going to be on sale. And another reason as to why you're seeing all this inventory build up is because during the pandemic, right? Everyone was staying home, everyone was buying stuff. And now that we can go out and do stuff again, we're more into experiences over tangible goods. And this is why the retailers know this and they need to get out ASAP. But understand the reason why they're doing this is because when they hold inventory on hand, it costs money. And they need that space to buy goods for the upcoming school season, Christmas, Thanksgiving, all the holidays coming up. And if you have inventory that isn't moving and you're holding it, then that means that when you buy new goods, you can't really bring it in. And this is why I believe that inflation has already peaked, because if it did not peak, you would not be seeing goods on sale. And again, when I say goods, I mean like clothes, I mean items that do not expire. I don't mean food or gasoline. And please understand that when you see these CPI numbers, they are a lagging indicator, just like charts in a stock market or cryptocurrency. These are all lagging indicators. So if you see the Feds increase the rate, that means that you won't see the effects until maybe a month later. It's not going to be immediate. So when you see these numbers of the CPI 8.6 and 9.1, well, it's previously. So please understand that. And the reason why you didn't see the stock market and Bitcoin crash below the previous lows is because it's already, in my opinion, priced in. And this is why I'm so bullish on crypto and stocks. And this is why I moved all my money from cash into stocks 2 weeks ago. because of this bottoming process. And ladies and gentlemen, be a little patient. It's coming. The same thing is happening with this cryptocurrency. Make sure you guys like, share, and subscribe, and I'll catch you all next one.